Welcome back, and joining us for more on the day's markets action is Kearabilwe Nonyana from Scope Prime Africa. Thank you so much for your time, Kearabilwe. Let's actually start off there with the Fed deciding to keep interest rates steady. Was this a surprise, considering also what we heard from Donald Trump, where he's been urging the central bank to reduce interest rates?
I think this is going to be two bulls locking heads, and I think Jerome Powell and Donald Trump have different views on monetary policy. I do not think that Donald Trump's way of thinking of monetary policy is as sophisticated as Jerome Powell. But I think what Jerome Powell said in his last meeting in December has kind of carried forward into the sort of decision which the Fed made. And essentially, they're seeing that the economy in the US is far too strong, with a very, very strong labor market, albeit being very weak on entry-level jobs. But I also think that they are really concerned about what happens if Trump does impose these tariffs. How does the inflation outlook really look after that? And I think those are the sort of questions they sit with. And I even think that our SARB sat with the same questions.
Yeah, it's really quite interesting. So let's actually bring it back home and take a look at the SARB that decided to decrease interest rates by 25 basis points. I was a little bit nervous considering what the Fed did. Is this also just emphasizing what the governor has always said, that the SARB actually watches the Fed and doesn't necessarily follow the Fed?
Well, what is the difference between those two statements, in my opinion? and Zanati, I really come outside every single time I listen to our MPC, because I think they're so far ahead of the curve, and that they've curbed inflation to a level which is at the lower end of the target band.
Yeah.
Inflation is not a problem in South Africa, and now it's starting to feel like they're looking for ghosts where ghosts are not. Yes, I do understand that there are inflation risk on the upside, but I do believe that our economy is far too weak for our MPC not to take decisive actions on at least stimulating the growth. You know, I was having a look at a stat, that we have the highest real interest rate of any country in the world at the moment, which is sitting at about 8.3%. That really does not speak well to any growth in the economy right now.
Yeah. So meaning, I mean, especially talking about the fact that the inflation rate is at the lower end of that target, and also looking at the real interest rate, it seems that we still do have more room to move here. But of course, now we look forward to March, where it seems that there's quite a split vote on whether the SARB will decrease or keep rates the same. Let's also talk about the ECB that also cut interest rates, and quite interestingly, ahead of that, we did get the growth numbers out for the Eurozone, I think for the fourth quarter, where there was absolutely no growth. So expected that they would cut rates there?
I think that, I anticipate that they are going to get it below 2%, inflation below 2% during the year. So I think they are in an opportunity right now where they can look at what can they do to support their economy. I mean, I think about the days when I started out in the markets, and that was during the debt crisis in Greece. And to have thought that in that space, in less than 12 years, the euro economy has almost become non-existent in terms of the engines of growth in the world. When last did you hear someone speak about a euro economy actually leading in innovation or advancing industrialization and civilization? It really is sad, and I really think there's something that needs to be done about that economy.
Yeah. Well, let's take it to the US again and talk about earnings. Of course, we were waiting for those mega cap stocks to come out with earnings. Of course, more still trickling in tonight as well. But we did get Meta that surprised to the upside on both the top and the bottom line. And then we had Microsoft that disappointed on revenue. And then we had Tesla that disappointed on both revenue and earnings. What stood out for you then, that mixed bag?
I think what stood out is sentiment. And what I mean by that is that the market has been dragged down by NVIDIA, and it's just because of the new revelations in the AI space. But I think right now, what the market is on tenterhooks about is these absurd valuations. And you really need to get consistent earnings beats. And I'm not talking about you beat your earnings by 2%. You actually need to show really good growth, especially in your outlook. And I think why you saw Microsoft was down about 6% in pre-session was purely because of that outlook statement. They do not see where the next dollar is going to come from right now. And that, for a company that's trading on a 30 times forward multiple, that really is not good news. So you'll start seeing a bit of weakness in some of these share prices. But I think genuine sentiment around tech stocks right now is not that great.
Yeah. I mean, is this a case or a worry of that maybe earnings may not be able to catch up to the levels where the share prices are at?
I think you're correct, Zinati. And simply put, I mean, I make an example to my mother who's not really well versed in investments. And I said, if we had to sell every asset right now and cover all liabilities that Microsoft has as we speak, the net asset value would be $140 billion. Tell me then, why is Microsoft trading at 2 trillion? Somehow that valuation gap needs to be made up from somewhere. And that somewhere has to speak about future profits. Can they make that up? And I think right now the market does not believe that most of these tech companies can make that up.
All right. Well, let's go into commodities because Glencore came out with a full year production report today saying that the second half definitely made sure that they reached their production guidance. But looking also at those production numbers on a year-on-year basis, you did see some softening there. What story did these numbers tell about the production picture at Glencore?
I think it was, for me, the first story it tells, Nati, is the decision not to leave the coal assets, and that's where you saw production jumping up about 165%. Albeit that the fact that they were bedded down an acquisition of a couple of mines, of a couple of coal mines. But I think it speaks more to the fact that commodity prices have been depressed, and no one is going to produce at an optimal level where they know what they're getting out of the ground is not going to be fetching top dollar. And you saw softening in cobalt, you saw it in copper. But I think the true value of this company is the fact that it's a commodity trader more than it's a miner. And that's where the high margin business is for them. But overall, I think this is one of the best diversified global miners. It's about 12% down on the year, which has not been great, but I think it has not been great in that sector anyway. But if you were to pick a star performer in this industry, Glencore and BHP would be one.
All right. Well, let us get to your stock pick for today, Kearabilwe. What are you choosing?
You know, Zinati, I was thinking to myself that I have not chosen a stock from South Africa in the last little while. And I started telling clients that I really am liking where Naspers is right now.
Okay.
And it's not because of where it is in South Africa, it's where Tencent is. And I think Tencent is going to be the leader in fintech, AI, cloud computing in the Chinese economy. And I really believe that that's the next place out of the US that's going to see growth. So my stock pick for the day is Naspers, listed on the JC.
All right. Well, thank you so much for your time and really your analysis on what has moved our money today. That was Kearabilwe Nonyana from Scope Prime Africa.